All right, good day traders. I hope you guys doing well. I'm dropping a short video on order flow and trend. Okay, publicly free. I'm definitely gonna learn something new in that. Okay, and very useful information on trading. All right, so let's begin. What is order flow? Okay, order flow is the moment of the market on the higher time frame, basically on the weekly and monthly. Monthly and weekly, we look into the order flow, like if the market is going up or the market is coming down. Okay, this is a very important time frame, okay, where we combine this order flow. All right, on daily time frame, the moment which happen, okay, on daily and a 4-hour time frame, the moment which happen, we call it as a trend. Okay, remember the trend and order flow, they're completely different. All right, so on daily, if the market is coming down, that doesn't mean that on the higher time frame the market is going down. Okay, that doesn't mean that the market is really in the bearish structure. Okay, if on the weekly, if the order flow is bullish, we might see this moment, the pullback moment. On daily, we call it as a trend. Always remember the order flow and trend, they both are different. Okay, most of the time, let's say 90% of the time, they go opposite side. This is where a lot of traders fall in trap. This is where they go into the wrong direction. Okay, once the order flow align with the trend, then the market will make a new high on the uptrend or the new low in a downtrend. Okay, let me show you how it works. Always remember, or supply and demand is the main core concept of trading. Okay, you can trade any pair, but the supply and demand rule applies to all the pairs. Okay, I'm just talking about right now on the Euro USD chart. Let's talk about the uptrend now. Okay, so if you're looking at the weekly chart, what's happening over here? High, low, high, sorry, low and high, right? So we got low, then we got a high, then we got a higher low, then we got a higher high, right? Unless and until if this low is not taken out, we can't say that the market is in the downtrend. Remember this. Unless and until this low is not taken out, we can't say that the market is in the downtrend, especially on the weekly. So order flow still bullish. Okay, unless and until this low is not taken out, which is responsible to take the previous high. If this low is not taken out, that means the order flow is still bullish. Okay, the moment what's happening over here on daily and 4-hour, this moment we call it as a trend, which is opposite to order flow. So if order flow is a bullish, the trend is a bearish. All right, so let's talk about the move which happened before. So if you look at here, we had this low which made this high. If you just put a line chart over here, you see it that the last high is taken out by this low. All right, so this low is taken out that last high. So this high was formed. Then we got a pullback. Okay, so this pullback, how it plays on the daily time frame, I will show you that. So just gonna remove this. So we got a drop, base, and rally. Market moved up and it take out this high. So the whole base, this is the last candle which dropped. We call it as a mother candle. All right, so that is the where we draw the zone. Now let's go to daily time frame. So the order flow is a bullish. The price made a new high. So on the daily time frame, also the market is a bullish, which is creating higher high, higher low, higher high, higher low. If you put a line chart, you can see clearly higher high, higher low, higher high, higher low, higher high, higher low. Okay. So this was the last low, which made a new high. So we just mark over there and we put back candle. This is the whole weekly demand zone. So if you look at in this area, there is a gap over here. Okay. So the bullish candle goes and closes here. The next candle should open up from here, but it went up. So the gaps are basically unfilled orders. All right. So that is a strong demand inside a weekly time frame. So the trend is bullish. The order flow also is bullish, right? So it will just keep going up, up, up. So we call it as a trend is a friend until it bends. So what happens over here? Once the market made a new high, once the market break the previous weekly high, this is where the price is overextended, right? So now the market has to come back to test the untested demand. This is what happened. So this last low has been taken out. So if you put a line chart, we can see clearly the last low has been taken out. So now from bullish, the market turned into a bearish. That means the trend on daily time frame from bullish, it turned into a bearish. But on the weekly, we are still in an uptrend. Why? Because this is the last low which break the previous high. So the trend is still bullish. Whatever is happening here, this is happening on a daily time frame, the shift in a trend. So now order flow and trend, they both become opposite to each other. So the trend shifted from bullish to a bearish, but on weekly time frame, we are still bullish because this last low is very important, which has taken out the previous high, right? So let's go to daily. So the last low has been taken out by creating this supply zone. Here also we got that candle, the mother candle. Then we got a breakout, right? So we need a retest of that. So that means the supply is in control now. So we got a retest beautifully. And now the market has to come back to look for that demand. So here we go. Start coming back to your demand zone. Now, if you put a line chart over here, we see that the trend is still a bearish because it's creating low, low, lower, high, lower, low, lower, high. Still lower, low, lower, high. And the price came back to that gap level. It rejected nicely. And we are still in a bearish trend. Okay. So the order flow is a bullish, but the trend is bearish. If you look at the weekly time frame, the price came to your demand zone. The price came to a demand zone. It's showing a rejection. On daily time frame, also it's showing a rejection. Okay. So now what is the confirmation that this demand is going to hold? So what we do, we wait for a daily structure to change from bearish to a bullish. So in this chart, if you look at here, this was the last high which break the previous low, right? And it came to a demand level. So if you come back to a candle, and when we look at here, this is what happened. The candle closed above. So when it did, this is your demand formation, right? So that means if you look at on the line chart, this is what the trend is aligned. So when order flow plus trend, okay, let's say like this. When trend plus order flow, if they align, market will make a new high in uptrend or new low in downtrend. So the order flow is a bullish on the weekly time frame. The market made a new from this low, which made a new high, which take out the previous high on the weekly time frame, which is the order flow. The trend also was a bullish, then it turned into a bearish by creating a fresh supply, and the market tested the supply zone. In the line chart, you will not see the wicks, but on the body of the candle, you will see it here. And the market start coming down, low, low, lower, high, low, low, lower, high, low, low, lower, high, and this is the new high has been formed. So this is where the trend is aligned with the order flow. If this thing happened, that means this demand on the higher time frame is a strong demand. That means this high will be easily taken out. All right. So this is where the swing trade comes into play. Right. So now if you come back and put back candle, this is where your entry should be. So now the trend is aligned with the order flow. That means this high will be taken out. Right. So this is where the swing trade comes. This should be your entry, stop loss here, and you drive right all the way from here to here, like almost in a 400 pips. Okay. So let's say what the market is going to do. Came back, reacted, then take off. Boom. It went more than 400 pips. All right. Same thing happening now. What happening right now? So weekly, the order flow was a bullish. Trend was a bearish, which turned over here. It came down to your weekly and fresh daily demand. So in this term, the daily demand was at a gap level. Still, what is the confirmation that this demand is going to hold? We see the break of the structure on the daily time frame. This is where the pullback, and this is where you should be entry, and your target should be that previous high. Okay, so this is our order flow game. So now if you look at the weekly, what's happening right now? Same thing here. When the market made a new high, when market made again new high, and we got two zone here. This is called level on level because we got a first demand and the second demand on the way. So when the two zones are next to each other, we call it as a level on level. 99% of the time, the market comes to the origin of a level. So that is where the market is right now. Okay, then we are waiting for the trend alignment to look for a long opportunity. Again, if this zone holds, if it breaks, that means we are going to go down all the way down. Okay, this is about a buy trend. Okay, so we will talk same thing about a downtrend, similar example of downtrend. So now if you look at over here, we had this drop, we had this base, and we got a strong drop, which is responsible to take out this demand. So this become a supply where the market actually reacted. Again, same thing, the market came down, creating this last buy candle, which we call it as a mother candle. And the market reacted beautifully from that zone. Then again, it went back to this supply and the market start dropping down by creating a fresh low. Same thing here. If you look at here, rally based rally, market is reacting right now. Same thing again, if you look at on this chart for the monthly time frame, market again reacting from here. This is the monthly time frame chart. So if you look at the weekly, okay, so when the market was here, let me just do the replay here. Okay, let's look at here. So on the monthly, the market came and tested the supply. Market came down to a demand because this is a rally based rally on the high time frame, right? So this is the demand. So the market went up, but it failed to break above, right? So market came down. Okay, let's look at on the weekly. Okay, so in the weekly, this is the whole area, right? This is the last low which made a high, which take out this high. So this is a very important level. Price tested, it went up, but failed to break above, and the market is coming down. So we need to wait for this zone to break. Very, very important, right? So now let's say what is going to happen. Boom. So finally, the price break this. So if you put a line chart over here, we see clearly the market has break this low. So now, what is the confirmation that this supply is going to hold? Because this supply break the last low, right? So now the order flow from a bullish, it changed to a bearish now because this is the fresh supply is from. So if this thing happened, that means this is the last low, which will be taken out. So If I put line over here, this was the last low, right? So now the order flow has been shifted from a bullish to a bearish because it break the previous low. So if you look at here, we had this last high, which made this low overall. And if I just put like a fib level just to see if the market can come back to a 50% level, we see a 50% level exactly in this area here. So let me go back to daily now. So on the daily, the trend also shifted to a bearish. And on the weekly, also the trend is shifted to, the order flow has been shifted to bearish, right? So this is where actually the trend is aligned with the order flow, right? So now if you see here, this is the drop is drop, which take out this previous low, right? So that should be your entry actually. This should be your entry. Okay, this is where the swing trade comes into play. This is your entry and your target should be all the way. This low should be taken out. All right, so let's see how the market is going to play over here. Boom, we came inside that beautiful candle 1 2 3, the mother candle, tested the mother candle. That's it, we are going down. All right, and boom, that's it. Now what happened again? Internal area, the low has been taken out. That's it, and the market will go all the way down now to take out this low. Here we go. Your entry is here. That's it. Your entry is here. Your target is that level. So you got easily like 1,000 pips move, right? So this is about a order flow and trend. Okay. So order flow basically we mark on weekly time frame, monthly also, but weekly is more important. And the trend we mark it on a daily and 4-hour time frame. So once the trend and order flow align, the market will go in one direction. So let's say if the market made a new in the uptrend market, let's say if this is the weekly order flow, this low which break this high, that means the market will come back here. This move which we call it on a daily is a trend. So once the market aligned with, once the trend is aligned with the order flow, change of the structure, that's where we buy, and that the previous high is your target. This is about a swing trade where you hold the trade for weeks, months, okay, for a few months to hit your order, because the trading is based on the weekly order flow and your entry should be on the daily or not less than the 4-hour time frame. Okay, I have shown you the clear examples what happened. Now what happened on the daily time frame? Like in order for the market, let's say for example here, when the market went up on the weekly, let me just close this replay. So when the market went up to the weekly, creating those highs, this move or this move after creating new high, right? How can we catch those moves? So those moves can be catch based on the change of the trend. Otherwise, you have to trade on a daily trading strategy. That is a complete different strategy. Okay, that is based on the time and price balance trading. These are not anything about ICT and all. It has nothing to do with that. Okay, most of the people will get confused. What is time and price? No, it has nothing to do with ICT concept. The price, when we talk, it's the prices of the daily candle closing. Okay, those candles are closing. We call it as a support resistance zone. Okay, these are not a traditional support resistance zone. These are the closing prices of those candles. Those weekly candles, those daily candles has the closing price. The closing prices are very, very important. So once the closing prices are met with the time, okay, based on the time of a trading and the candle closing, that's where we look for trading the day trading. Okay, day trading is a completely different concept based on the Of course, order flow and that. See, when the supply meet demand, price get balanced, then the price look for the next supply and demand zone. When you look at on the higher time frame, such as monthly, weekly chart, we know where the price is heading based on the order flow and trend. But the way price balance supply and demand on a higher time frame, it has to do the balance the same way on the lower time frame too, such as 4 hour, 1 hour, etc. But on the day trading, there are two main important things. Remember, on the day trading, there are two main important things which you need to follow. First is price and the time. So when you say price, price is the closing price of the level. So whenever you are entering the market, the very important thing is how does the previous week candle close, where the market is reacting from, where the market can go to, all right? This is where the market actually reacted from, okay? And now this is where the market could react back. So on daily, the zone comes a little bit upper. So these are the areas are very, very important. So on the day trading, we have to look into these levels, very, very important levels, okay? So last week I had given this sell to my team. There's actually a sniper entry all the way from here. So the closing price, actually the entry level was this candle, closing price was very important. So if you look at the closing price on the 4 hour, that is what the reaction happened exactly. That is a sniper entry I took. You can check on my Instagram. Okay, beautiful entry and beautiful risk to reward, like almost an 100 pips drop. Okay, so if you guys want to learn this day trading strategy, do message me. Otherwise, I had already shared with you a beautiful order flow strategy. Okay, order flow and the trend, alignment of a trend. You can trade that market. All right, guys, stay safe, look after your family, and have a great day ahead. Cheers.